Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today.
Hey everyone, looking at Netflix on the daily and weekly time frame. So 3 days of heads up that we were at a very key resistance level and we were unable to get above it. Rejected from the 200-day, pulled back, rejected from the upper Bollinger Band in the 200-day, and then the same thing. That day on Thursday was an inside day. You can see the trading ranges tightening up each day that goes. And when that happens, you can use the previous day's range to indicate the short-term direction. If we break the high of yesterday, 105, we see a breakout. If we break the low, 98.82, we see a move to the downside. Obviously, you can't anticipate that it's going to be this significant a move to the downside, but if you're utilizing shorter-term time frames and you get in as soon as 98.82 breaks for the bears, you don't get an exit signal for hours. And let's look at the 5-minute chart here. So if you made your bearish entry, what was that level again? It was the low of yesterday, 98.82. Let's see where that lines up. Right here on this candlestick, you are in bearish at 10:05 a.m., and you can say to yourself, I will exit if the 20-period moving average becomes support. And that's a pretty tight stop loss because it's not too much upside until that level. And if that was your guide, you are in this trade bearish for 3 hours, over 3 hours, and then it finally becomes support. And you would have missed the new low of the day if you got out on that 20-period moving average becoming support, but still very nice gains to be had on the day. So the fact that we closed at the low of the day does indicate weakness heading into next week. Losing the middle Bollinger Band for the first time in 6 weeks, 5 weeks, is also significant. We're looking down at 94.88, the 50-day moving average, and then on the weekly time frame, we've got the middle Bollinger Band, 94.55. So the weekly was close to a bullish break. You can see this range is still tightening, and we did get that bullish upside, but obviously the market conditions weighing on Netflix today. And if we see a move back to the downside, we are still in this tightening range of lower highs and higher lows, and we could pull back even all the way down to $89, this 100-week moving average, and still stay in that tight pattern. So we're using this channel now, this 100-week support and this 50-week resistance. That's the general guideline we can use. And if you're using trend lines, you can get it a little bit more tightened up. But in terms of where we are headed, it really depends on where the overall market is headed and how much more bearish downside are we going to see. The close at the low of the day indicates further downside on Monday, but some of these RSI levels on the shorter term time frame are pretty oversold. And checking just Netflix on the hourly real quick, that RSI ended the day, it's down at 23 here after hours. So not as oversold, but SPY is down at 6 RSI. So definitely very oversold there. We'll have to see what Monday brings, and leaning bearish. Have a great weekend.